So let's start by talking a little bit about the changes that we've seen to the energy sector over the last few years. So many of you are probably familiar with the energy trilemma and how energy should be balanced between being reliable on one hand, affordable, and at the same time sustainable. These three concepts are usually quite conflicting, and you have to choose one. And what we've seen over the last couple of years is that the focus has really shifted between these three sort of ends. This was supposed to be a kind of animated slide, but what we see is that since 2015 is that the focus has very much been on sustainability, how we can develop energy systems with lower carbon emission intensities. Then in 2021, we see a very high pressure on energy prices, and then the focus and the attention turned to the affordability aspects and how we can make energy more affordable. But since the invasion of Ukraine in February 2022, we've seen this again shift towards energy security and the importance of having reliable energy systems. Now, an alternative way of looking at this is not as a trilemma or triangle, but rather as a let's see if I can get this to work. As a hierarchy of needs, I guess most of you are probably also familiar with Maslow's hierarchy of needs, where you have the most important, the most basic needs at the bottom of the pyramid, and as you move upwards, you have more kind of luxury goods. And if you try to put this in this energy system into this context, you can think of energy reliability or energy security as really the foundation. That's what you need to have in place before you can start thinking about things like sustainability and affordability. And above reliability or energy security, we have affordability. So once you have the basic energy needs in place, then you can think of trying to make it as affordable as possible to make it more available. And finally, sustainability in this context can be seen as more of a kind of luxury goods. Once you have the two others in place, that's when you can start to focus on that. And since 2015, we have been very fortunate having access to both reliable, secure energy as well as affordable energy. So that's where we have had the luxury to focus on sustainability, but that is now being put to the test. Next slide, please. Now, then we can try to plot the different energy sources into this hierarchy of needs, and you can compare them across these three dimensions. And what we see then is that there are really no silver bullet that score high across all these three dimensions or all these aspects. If you take oil, that is certainly very reliable. However, it's not the most sustainable or sustainable fuel, and the same can be said about coal. Renewables, on the other side, is certainly very sustainable, but it does not have the same, cannot afford the same energy security and reliability as some of the fossil fuels. So the way forward will be to find a balance between these three aspects of reliability, affordability, and sustainability. If you then go to the next slide, please. So let's look then at how the world has responded to the events of the last couple of years, and especially now with the invasion of Ukraine last year. What we see there is that there has been a divide, you could say, about how the East and the West has reacted to this event, with the West, for instance, with the US launching the Inflation Reduction Act, which is the biggest package of legislative climate incentives in the US ever. But on the other side, in East and especially in China and some other Asian countries, we're now seeing increased use of coal simply because the high commodity prices that we've seen over the last year prevents these countries from using more sustainable fuels. So there has been a different response depending on where you are. If you look at how many of the companies are reacting, this shows an overview of many of the big traditional oil and gas companies have now shifted their focus towards renewables. So if you look there on the slide chart to the left, you see many of the major E&Ps having currently allocating less than 10% of their total capex towards renewables. But if you fast forward to the 2030s, you will see some of these companies allocating as much as 40% of their total investments to renewable energy sources. And then you can see to the right there their renewable targets as well as their current portfolio of renewables project. And you see that these companies, most of their portfolio is still in the sort of blue bucket there, which represent renewable projects in the concept stage, meaning that they have not yet taken any financial investment decision. So to reach their very ambitious targets, of some of which reaching 60 gigawatt of installed capacity by 2030, you will have to see a lot of new projects being sanctioned in the coming years, or they will have to do this inorganically by acquiring smaller portfolios from other companies. Then let's look at the investments needed to reach these different investment needed into the energy sector going forward. So if we look at over the last 10 years, the total investments into what we here label as upstream energy was about 2.4 trillion USD per year. And the split was about 75% fossil and 25% low carbon intensity energy. Now, if we fast forward to the next 10 years, then we can here look at that on different scenarios for different temperature increases. But we see that across all these scenarios from 2 degrees and down to 1.5, there is a significant shift in investments to renewable sources. In the 1.5 degree scenario, we see that about 80% of the investments over the coming 10-year period will go into renewables, while only the remaining 20 will be towards fossil sources. If you look at the 1.7 degree scenario, there the split is about 50-50. So that's the kind of point where we think if you aim for lower than 1.7 degree scenario, there will be an overweight of investments into renewables over the coming decade. We also see this if we look at investments into oil and gas specifically. One of the things that we've observed historically is that there has been a very close correlation with cash flow from operating activities and long-term investments in terms of both capex, which is the green line is the cash flow from operations, and the blue line is the exploration capex, which is typically seen as a sign of the oil companies' long-term investment decisions. And historically, there's been a very close correlation between the two. But if you look at the last 3-4 years, there's been a kind of disconnect between these two metrics. And the reading of that is that the oil companies are now seeing that the discoveries that have already been made are making up a large portion of the oil and gas that is being needed. So there is now a less need to discover new resources that will only come into production 10-15 years from now. However, there is also a sort of there are differences between different company segments when we look at how much they are planning to spend ahead compared to how much they spend a couple of years ago. So if we look at the ratio between the capex spending in 2021 and how much they plan to spend in 2025, we see that for the big oil majors such as BP, ExxonMobil, Eni, etc., then they only plan to increase their spending by 10% from 21 to 25. The same number goes for the independents, including the likes of ConocoPhillips, Woodside, Murphy, and so on. However, if we shift our focus to the NOCs, the national oil companies, as well as the smaller independents, which are here labeled as private E&Ps, they have a much more, should I say, pessimistic outlook on the, and they plan to continue allocating more capital to oil and gas and increase their spending by a factor of 1.7 for the NOCs and 2.2 for the private E&Ps. So if you ask which place will continue to focus on oil and gas investments, it seems to be the smaller players as well as the NOCs that are not seeing the same pressure from their investors to shift their focus towards renewables. Now I'll talk a little bit about offshore wind, as I'm sure based on the introduction this morning, a lot of the people here in the audience seems to have a strong interest for that. And if you look at the total installed capacity as of the end of last year, that was about 60 gigawatt globally. And as you can see from the distribution here, it's very focused on Asia or China, which accounts for almost half, and then UK, Germany, and continental Europe accounting for almost the rest. If you look at and also how that has developed over time, you see from 21 to 22 there was a quite dramatic shift there, which was primarily driven by China, and that was caused by the end of their feed-in tariff, which gave the developers 850 yuan per megawatt hour in subsidies, and that was only applicable to developments that was operational by the end of 2021. So after that subsidy came off, we're also seeing a drop in the development of Chinese wind farms. If we look at the awards that have been made, the picture looks a bit different, because in the last couple of years there's been a shift towards, also as you can see here, the Americas with the green series here, and also a stronger focus on Europe, as many of these the countries in Europe as well as the US have had large awards of new licenses for offshore wind. However, it will take time for these awards to kind of translate into operational wind farms, and that will come in the years to come. And later I'll talk a little bit about how this will impact the demand for offshore wind vessels. But first, this is how we expect the development in operational offshore wind to develop. You see we're coming here from a current installed capacity of about 60 gigawatt, and we expect that to grow to 285 by the end of this decade. And that means a almost fivefold increase over the next 7 years and so. And you can also see from the distribution here that Europe continues to be having a very stable and strong development of new wind farms, while and the same goes for China. But also there's many new Asian markets opening up. That includes Taiwan, which we've seen for some time already. It includes Vietnam, as well as Japan and Korea also coming towards the end of this decade. And also you see, sorry, if you go back, And also the Americas, with particularly the US, also starting to develop new wind farms that will become operational from the middle of this decade. One of the trends that is driving this development is also the turbine size, or the size of each individual turbine. And here we plot how that has developed historically. And currently we are at an average of about 7 to 8 megawatt per turbine in terms of capacity. It's a little lower in APAC or in Asia than what it is in Europe. But if we look to the future, this will only increase. Where you see here, this will just increase towards the biggest here being around 15 megawatt per turbine. But there are now turbines in development with a capacity of 18 megawatt that will enter the market over the next few years and continue to drive this trend of bigger turbines into the future. And you see also the US or Americas, the green dots there, are on the more higher end here with higher specification turbines in their wind farms. So if you look at this slide, we break it down into buckets of different turbine sizes. And if you look at the last bar there, which is the second half of this decade, you see that only about 1/3 of the turbines that we expect to be installed have a capacity of 10 gigawatt or lower, and the rest are bigger turbines, which drives me to the next point, and that's around the need for new vessels that can handle these bigger turbines, because the vessels are typically built for a certain capacity, and historically, when the average has been low, below 10 megawatts, they have been able to handle them. But with these bigger turbines that are now being installed, that becomes a challenge. And if you go to the next slide, here we show the as the bars. This is the number of vessels that you need to handle the capacity that we expect to be installed. You can see that increases to about 40 vessels. This is only for the turbine, by the way. 40 vessels towards the end of this decade. And if you compare that to the red line, which is the number of vessels that can handle turbines above 10 megawatts, you see that there is a quite large gap of around 10 vessels that needs to be built before within this time frame in order to handle the expected load. And you can see historically there's been actually quite a bit of slack or overcapacity in the market, but with this growing demand, we expect that to be that the demand will be, or that there will be sufficient supply only until about mid-quarter, and after that you'll need additional turbine installation vessels to be able to handle this. The same we see if we look at the foundation installation vessels, which are the vessels that install the monopiles or the jackets that the turbines are installed on. Here we see an even kind of quicker outgrowth of the current supply, and we expect that from around 2025 we will need to have new vessels to be able to meet this. And considering how much time it takes to build a vessel, we might actually run out of vessels before we get there. This is only two years from now. So, next slide, please. Then towards the end, let's talk a little bit about the more traditional offshore sector with the drilling rigs as well as the OSVs. So I talked a lot about the growth of the wind sector and the need for new vessels there. But what we're seeing now is also a resurgence in demand for drilling rigs, both on the jackup and on the floating side. And you see that from 2020, so all the way from 2021 and to 2025, we expect an uptick in demand for floaters, growing by 8% every year. And we see that also by the rig owners now having to reactivate many of the rigs that were stacked throughout the COVID pandemic. And also now many of the rigs that were stranded in the yards and that were where the contracts were being terminated are now actually being sold to the rig owners. And there are currently only 3 or 4 floaters actually available from previously. I think it was 14 at the heights. So we're seeing a lot of increased demand for drilling. And we also see the same on the jackup side, not the same growth there, but we see around 4% annual growth from 2021 to 2025. Also, when we look at the demand for vessels such as OSVs, anchor handlers, and offshore construction vessel, we see a quite rapid growth we've seen it from 2021 until what we've seen today, and we expect the high activity to remain at the current high level all the way until 2030. So that was my last slide, but just to sum up, we see now a big shift in the energy markets where there's a very strong focus on energy security. That also translates to very high demand for offshore wind installation and also the demand for increased new building of offshore wind installation vessels and also supporting vessels there. But despite this and despite everything you also hear about sustainability and the need and the end of the oil and gas era, there will also continue to be a strong demand for rigs and offshore vessels in the years to come to support oil and gas as a important source of energy security. So that's it for me. Thank you very much, and thanks for the invitation. Yeah.
We have time for one question. If anyone has a question to ask Martin. Nobody? Okay. Thank you.
Thank you.